consumers since really mid-2019. In 2019, the yield curve inverted, and China-U.S. trade tensions got worse. Businesses became risk-averse.
Hello,
and
World
they
Globe.
stopped growing their
This is
inventories
what's up.
faster than sales.
Understand
They
what
cut
I'm
back on
saying?
capital spending. Then
This
we move
is
into
real,
the COVID crisis, and they
and it's
shut
about
down.
to get real
Then, of course, the government
because
put
the
in place
bank
stimulus
refusing
payments.
me,
The
and the
consumer saving rate hit 33%
market is
in
reading it.
April of last year. So consumers went to
And every
market.
time
Really,
the
it
bank
was to buy
refusing me,
goods, which are only
like
a
I
third
don't exist,
of total
the
consumption.
market gonna act
So they
like
spent the year
they don't
buying goods. They
exist.
couldn't really buy services.
It's not just
And
gonna hurt me,
businesses have not
it's
been able
gonna
to
hurt
keep up with them. What we think is
everyone.
happening now
You
is
see,
double and
one
triple
thing
ordering,
about the market,
which
that it's a
will
good
end up
thing,
in, we
it
believe,
pays,
a significant inventory overhang
and it
next year.
reads,
And that will
and
be
it
cleared
collect.
by cyclical price cuts.
You don't have to
Now,
worry
in
about
terms
the
of
reading,
monetary policy, and this is where, and fiscal
because
policy,
the
this is where you and
engineer,
I
they does
discuss
that.
and debate a lot, Art.
The
I
market,
remember after 08,
it
09,
just
I was
collect,
sure that the
and they
monetary
collect
easing
all the
would unleash,
all the
fiscal policy
percentage
easing would unleash
within that
inflationary forces. And I was wrong.
on
What
the
happened
market
was, and I know you and I
that
joust about
involved
this,
with the
but
bank.
I was wrong too, by the way. If you saw my piece in the Wall Street Journal, I
And
made an utter
understand
ass on myself,
something.
at least I know it. And I learned from my experience.
Ain't nothing on this planet or
velocity, which I know you
company
consider only a
print
residual,
us
but
even the
velocity
money
went down. So the rate at which money turns over went down. People were
that
scared.
it doesn't
And
involve
we know
with the
from the
bank.
70s, it is when velocity picks up and when
And they got
consumers
to
and businesses try
realize
to get ahead
it's gonna
of
pick up the
price
old,
increases and
not
interest rate
just my
increases
old,
by buying now,
but other
that
old,
that we see an inflation problem
that
building
it have
and
to
moving
pay
into
the
wages
market
as well.
to collect
We are at a
this
very
death
important moment right
certificate.
now. Velocity is stabilized.
Yeah.
It's ticked down in
I
recent
don't
months, and I
know
believe it will continue
simple
to
way
tick
to
down
break it
because what I
down
just gave
to
you
you,
was a deflation story, a secular deflation story,
because
which, if we're right at how powerful this story is, will mean that velocity will
the
continue
big
to fall because
investment,
prices are going to fall. And
they
interest rates are
talk,
falling. I think interest rates, you asked me the other day why I thought
they
real
talk,
yields were negative, 10-year yields negative. Do we really believe real GDP
marketing
growth is going to
talk.
be down negative for the next 10 years? I
You
think there's a lot of
understand?
mismeasurement right now taking
They
place
don't know
in the
how
nominal
to
GDP accounts.
talk
And if
down
we're right,
with the
these
small people,
statistics, having been born in the industrial age, do not account
because
for the digital age.
the
So
intelligence
that
is
probably
not going
means
to let them.
that real GDP growth is higher and inflation lower. But it's very
But
confusing.
you get
I will give
a lot
you
of
that because the
small-minded
markets are
people
contradicting each other.
in the
Ooh,
market
it
as
is a
well.
rocky end to the year, isn't it? We're seeing all three major averages indicate a drop of at least 1% at the open. And Saz, the sentiment this morning is
the
decidedly
market,
risk off. A lot of
it
it
does
having to
not
do with the virus once
discriminate.
again.
Yeah, and it's been a tough.
Only
Looks like a
thing
tough
it
market open
does
here,
is
Julie.
pay
Dow down more than
and
400
read.
points. You're seeing tech stocks still under pressure here. Work from home names doing well. Looks like it almost
And
feels like
when
mid 2020 all over, except the broader market is holding up pretty well, all things considered.
an
Yeah, so
engineer
we're going to take a look at some of the groups that are most affected typically
tries
by
to
COVID
look
in just
over
a
it,
moment. But here is the opening bell on this Monday.
it would read them too, and it would let them know.
And the folks at luxury brand Xenia are
No,
ringing the
you
opening
cannot
bell this morning.
control
They're
me.
going public through a SPAC deal
This is
today,
what
and we're
I
going to
do.
be joined by
This is what
executives
you
from
designed me
that
to do.
entity just a bit later on in the show.
And it
Interesting.
does.
One of the first, I believe it is
It
the first
works
Italian luxury
very
house
well.
to list here in the United States. So again, here this morning,
They can't be mad
like a drop at the open. Combination
because
here of virus
they get
concerns
their
and what
money,
kind of economic impact that is now
because
going
the
to have,
bank
and what
wants to
appears to be
discriminate
the death
against
of the Build
someone
Back Better Act at the hands of
and
Joe
take their
Manchin. So
money
that last
when
bit
it's
of
already
economic and
priced.
fiscal stimulus not coming through. And so as we we go now into 2022,
And the thing
you know, that
about it,
monetary stimulus is going to be ebbing as the year goes
it's
on.
going to
between
keep on
winding down the
pricing.
Fed's bond buying program and, of course, interest
So
rate increases that are expected to come.
when
And
it
now we know the fiscal
keep on
stimulus that
pricing,
maybe was going to come through is not, in
the
fact, going to come
economy have to pay
through.
for
Then
that
put Omicron on top of all of that,
because
and you've got
everybody
a downdraft
trusts in the
in markets
banks,
here right now. So
and they
we want to
keep
circle back to some of
adding,
the usual
adding,
contenders when it comes to stocks that see
adding
weakness when we
stocks,
get virus resurgences. Travel stocks, of
is
course, a
adding
prime
bonds,
example of that, and we are indeed seeing
introductory
selling
stock,
in that sector this morning. Carnival, by the way,
introductory
also just out with
bond.
numbers. I haven't had a chance to go through them yet, Saz. I know
It
that you've
just go
been
on
looking
and
at them.
on and
What